So before I start today's discussion, let me discuss something about the event. So as all of you know, this is a 4 days program we have scheduled. It's a 4 days program we have scheduled, and it is on 20th, 21st, 22nd, and 23rd. 22nd and 23rd. So 20th we had the live market discussion from 9:15 to 10 o'clock. Various concepts you have seen on that day. So you have seen our software, how it has worked, and the recording also I have put it there. So Nifty, you got a success. And yesterday you had a session at 5 to 6. So I have taken various concepts, how to invest in the mutual fund, how smart finance can help you to invest in the mutual fund. Besides that, lot of concept how you can utilize the volatility for doing the intraday trade. And also I have taken the jet score, using the jet score, how you can do the pair trade. So these are the three concepts we have studied yesterday. So the pair trade using the jet score, intraday trade using the future means using the Fibonacci and volatility, and also I have told you how you can invest in the mutual funds this point of time and what will be your approach, how you can analyze that. So these are the things we have studied. So some things I just want to tell you today. You are going to learn many other things. You are going to learn how to initiate option strategies. You are going to learn the Gann square of 9 principle. These principles what we are learning, whether these principles really work in the market, that is very important. So many of you, whenever you are buying any service or any kind of product from anyone, you often ask that what is the percentage of success, how much it is success, and other things. We had a session, if you remember, April 5th, we had a session on the Gann's trend reversal date. So I'm just going to that particular recording. 5th of April, there was a session where we have learned a mathematical principle. I have told you that trend reversal date for the Nifty, we have calculated 7th, 9th, 17th, 18th, and 29th April. So these are the 5 trend reversal date we have calculated for the month of April. This video is very much there. From 28th minute onwards, this discussion is there. 5th April video from my website, from my YouTube channel, you can browse it. So have a look on that. So same thing also has come in our Gann software. I have also shown that Gann software, the software what we are having. So that particular software also, we have the same thing, it is coming up, but it's a different method. So 16, 17 is coming, you have only one day deviation, 7, 9, 29 is common. So whether market Nifty mobilize this calculation. So we are at 21st of April now. 21st of April today. So let us have a look whether it has worked. So what does that trend reversal say? So you have 7th. So here again I will be taking you to that particular video. You have a 7th, 9th April, 7th April. That means whatever the price action will be on the 6th of April, 7th of April you will be experiencing a opposite price action. So 6th we had a holiday, so we have to look into the 3rd of April. If you compare the 1st and the 3rd of April, there is a almost 180, 160 point of negative closing you can see Nifty. These are the data I am taking. Then just have a look at this is 7th April when you have a trend reversal date. Then you have a second trend reversal date on 9th. Then you have a third trend reversal date on 16th and 17th. When there is a 2 consecutive day comes, then the same trend will be continuing. And as per that calculation what you have learned, 17th and 18th was there. So till this point you have this values. So you can say yesterday also, so 18th was a holiday, so next working day it will work. Just have a comparison. How many days you have Got a success. 7, perfectly it has worked. 9th, perfectly it has worked. 16th, it has perfectly it has worked. 17th, 16th and 17th are the consecutive days, so it is continued. Even though if you go with the Excel calculation, what I have given 17th and 18th as per a different method, that will also continue. So these are the facts in front of you. The calculations, mathematical calculations, what you are doing, it is perfectly accepted by the market. So any analysis you can do, you can put any masala into that, but provided market must accept it, then only it is known as a forecasting. What is a forecasting? If you say that tomorrow it is going to rain, and if it is going to rain really, then only your forecasting comes true. Then only that forecasting is having some meaning. So we have done these calculations, plain small mathematical calculation on 5th of April. Today on 21st of April we are sitting and you are seeing the success of that method. So for that reason, even though if you do not have our Gann software, even though if you do not want to procure that software, that doesn't matter. But you must follow this particular method. So I have given this calculation, April trend change date calculation. Just follow these steps, calculate it, at least follow that. That is my point, and definitely you will get benefited. Today's discussion will be on the Gann square of 9 dynamic principle, option strategy, what you can take during this result season, how to do intraday and positional option trades, Elliott wave, how you can use that concept for your investment. The recording of the session you will get at the end of the program, and it is a free program. You can able to invite your friends to join this program also. So there are 4 different topics we are going to discuss today: intraday and positional trade in options, dynamic square of 9 principle, option strategy best suitable during this result season, Elliott wave concept to utilize for the investment decisions. And in this particular things, initially I will go with the how you can do intraday or positional trade in the options. So that is very, very important. How you can use intraday and positional trade in the options. So when you trade in the options, what are the critical areas you need to look into? Whether it is an intraday trade or positional trade, you need to identify the correct strike. All strikes are not suitable for intraday trade. Why? Certain strikes will have a higher theta decay. Certain strikes will be having some inconsistent IV. When I say about inconsistent IV, that says that the implied volatility of which is common to most of the strikes, but certain strikes will be having a quite a different implied volatility, maybe because of their low liquidity. So the choice of strike is very important. Then you need to know whether to trade in the call options or put option. Based on the trend, you have to decide upon that. Identify the entry price and profit target. So these are the 4 tasks you need to do. So now just we'll move to the intraday trade analysis of the options. So these are the 4 activities we have to do. First thing, correct strike. Second thing, we need to know whether to trade in the when to trade in the call option and when to trade in the put option. So that part also is very important. So before that, one, if you are using any of our tool, or if you are using the any of your tool also, if you have any of your option analysis tool, first thing you need to do a proper trend analysis of the underlying asset. Maybe it is Nifty, Bank Nifty, whatever the things asset is there. So that particular assets, underlying assets trend analysis must be done initially, and after doing the trend analysis of the underlying asset, you can able to identify the proper strikes wherein you can able to do the trade. So for that reason, say Nifty you are getting at 9,000 9,000 sorry. So say 8,950. This is the Nifty. For example, now yesterday we have used in that some Excel sheets to calculate those levels. So I'm going to that same Excel sheet here. So here the price points I'm just changing here. So here the price points I'm just changing. So we had 18th and 19th we have the holidays. So 20th is the last price what we have got. So for today if you would have if I would have asked you to do the trade, how you could have made that. So Nifty. So I'm just going to the NHE side. I want one price info, NH India. So all your queries you can put it in the end. So first concentrate on this lecture. So NS India, and we want the Nifty prices. So first the Nifty prices where we want 20th closing was 9265. So this was the Manishi is telling 9265 was the closing of Nifty. So 9265. So that is the last traded price. So 9265 level we have closed it. So I'm just putting it here 9265.5. So this was the closing of the Nifty, and based on this last traded price, so 9265 was the closing price of last traded price of the Nifty. So we have put it and we got all calculations done. So today based on that particular calculations, 14% volatility, nothing to worry. So this is suggesting you above 9281 uptrend, below 9248 downtrend. What happened today? That is very important. So today what happened? So it has opened at 9031. The opening was 9031. So whatever the calculations you have done as per this Excel, it become irrelevant because there is a gap down opening. So in case of gap down opening, what you have to do? You just have to change all the data. The oldest data you have to take it out and 9032. So this is the opening price happened 9031. So you have to replace this data. So you got a new data point here, and here you are getting 24% as your 24% as your volatility based on the gap down opening. So nothing to worry here. So once it goes to a bigger range of 30-40, you can think of changing that things to 1/3 of the volatility. So this is the levels you have come. Now in the option terms we have to understand. So we need to understand in the option terms. That was the previous close. You are not talking about, this is the last traded price 9265. It is not the closing price. So here what happened? 9031 today it has opened, and these are the levels you have got. Now in the option terms, you need to identify the correct strike of options to trade. Correct strike options to trade. Nifty opened at 9031. So now how you can choose a strike? After opening at 9031, if Nifty move beyond 9059, I can think of trading in the 9050 call options. Very carefully listen to this. This is how the choice of strike should be made. After you made the analysis, wait for the uptrend to break out. If the uptrend breakout happens 9058, then the nearest strike 9050 call option you can buy. If the downtrend breakout happens at 909003, then you can think of trading in the 9,000 put option. So this is how you should make a choice of your strike. This strike choice has to be done in this way. So 9050 call option should be traded if the Nifty goes above 9059. If Nifty comes down to 9003, then the 9,000 put option need to be done. We have a, suppose if you do not have our web calculator, or if you do not have our paid calculator, try to use our web calculator, because once you have decided the strike, the question comes how you can know where to buy, what will be your stop loss, and what will be your targets. We do have a free Android app, Intraday option buy sell signal app, Android app. You can install it in your mobile and use it, or you can use the web edition. So whatever the way it is there, you can do it. But it is a manual problem thing. You can't able to make means pull the data and do it. There manually you have to enter it. So now we have got all these informations. So now we have to look into this particular options movement, and we have to do the calculation in the web and see whether that calculation comes true or not. That is three tasks we have to do. You have now decided which strike should be chosen to trade and when. Now question comes, once it goes to 9002, I have to choose that 9,000 put option. But that time I need to analyze in the opening basis both the things, and then I have to keep my calculations ready. So for that, now you have to see the chart. So here you just go for the allow the flash, reload the data, and now you can go for the when Nifty has opened, what was the price this 9,000 put option has opened. So I'm just taking this taking this pointer here. So once the Nifty has opened, 9,000 put option opened at what price, that we need to understand. So 916 or 915. So 915 no trade in the option. So option has started trading at 916. You can able to see in the top two things here. Two things is coming in this place. So very carefully try to understand this particular chart. It is slightly from the NSE, but this slightly gives you little confusing info. So just click on this blue button, so green button. So the chart will pop up here. 9,000 put we are analyzing based on the opening price. So open, it has happened 9131.7 contract it is telling. That means 9,000 is the strike, 131 rupees and 70 paisa it was opened. So then after it has moved, it has gone to 145. Prolonged period of time, it was trading at 128, 130 like that. Then it has gone to 187, 189. So this levels also it has come 170, 189 and all. So but the opening price is very important, 131 rupees 70 paisa. Nifty future has opened at 9031. Nifty spot was opened at 9015. So you can take anything in this calculator. So informations are ready in our hand. So 9015 the spot, you can take the future also, no problem in that. How many days are left till expiry? Today we are 21, 30th we are expiring. So we have 10 days, 3 to 5, 6, 7, 8, 9, 10, including today. So 10 days are left till expiry. Strike is 9,000 and the option 131 rupees it was trading, and put option you calculate it. So future also 90. So future also it has come to 9030. So opening basis you made a calculation, your implied volatility 26%, all these calculations has come here. So all these calculations has come here. So buying of these put options at 137 rupees, it recommended you. Buying of the put options has recommended you 138 rupees, and almost the same level what you have calculated there, 9002. So 9002, it is just taking 2 points below. So buy at 138, keep a stop loss of 117, 145, 153, 169 and 195 as your targets, put options. If the underlying Nifty, the spot you have taken, so if the spot goes to 9,000, you can buy the put option, keeping a stop loss of 117. These are your targets, and these strikes also you have decided based on the underlying asset price analysis. So now just have a look on this chart where how much it has given. So that is very important. So this is the chart. So I'll just go to the price part definitely. So here 9,000. So you can see here. So 9,000. So it has today 9,000 put option. Sorry, it is 23rd April. So I have to go for the so anyway, we have done for 23rd April. So let us see 23rd April where it has gone. It is weekly options we have taken, but the number of days till expiry was not done properly. So that was very less days. So 196, 159, 117 low, 130 was the open. This was there. So let me move to the monthly options. So this is for the weekly options. Number of days till expiry was wrong. So now move to the weekly option. This was a weekly option. Let me move to the monthly option. So monthly option 30th April, same data point will be there, but only thing is that our our premiums will be different and calculations also will be different. So 916, so 916 price point 232 rupees, 232 rupees 915 itself it has come. So if I just do the calculation in the same way in my calculator, so 232 9015, 10 days left till expiry, 9,000 put option and 232 rupees and put option calculate. So this is the put option and we have to calculate. So 90 30th April 200 and 30th April. So 30th April I have taken. So 30th April 30th April. So this is the opening price we have done 232 rupees 35 paisa, and same way calculation has happened. So this has 232 227 for a prolonged period of time it was trading. Then it has gone to a level of 286.88 level, and finally we are seeing the price as 260. So what the calculations has given us, that is very important, very important. Weekly options also you can use in this tool. So this gives you the same kind of calculation. 239 rupees you could have bought, 218 will be the stop loss, and these are the targets. 295 was the last target it has given. 270, 254, 246, these are the intermediate targets. So 295 was the last target as per this web calculator, and you have achieved till 291. 260 is closed, and low also 210.95. 210.95. So these are the values are very important. So this web calculator also works in this particular method. So same way, if the Nifty move above, if the Nifty move above 9059, then which strike and which type of option need to be analyzed. So here first do the Nifty underlying asset analysis, means Nifty analysis. If you are going to trade in Nifty options, then decide which strike option need to be taken for intraday trade. So downtrend wherever is there, nearest strike, uptrend wherever is there, that nearest strike. Once you decide upon the strikes, then you need one specific tool to calculate. So options doesn't obey that same way of a pivot points, Gann, Elliott and other things. You cannot able to put those premiums there. It has a pricing model. It has delta, theta, time value, everything associated with that. So for that, you need specific tool to work on that. So here, so for that reason, you either you can utilize our web tool, or which is a manual tool, or you can just take our Android application also. So we have the Android application. So that also I have shown you. So that Android application you can download from this calculator link itself. We have given this Android app. You can download, fill the data the way I have shown in this video, and do the analysis. So and follow accordingly. So this is the process of doing intraday trade. In the choose the correct strike, whether to trade in the call option or put option, how you can define your entry and targets based on either the paid tool or the free tool, and you can use the scanner also. So if you are all this process, if you do not want to do manually, simply you hit on the option scanner. So option scanner will identify all strikes which is suitable for trading, and based on that you can just have a trade. So fine. So this is for intraday trade. When you do positional option trading, very important part. Many of you are aiming for this positional option trading. Positional option trading means you are buying an option, holding for a couple of days, and then selling it. There are specific rules are there. Do not buy the option in the first week of the settlement. Do not positional option trading. Do not buy any option if the IV is above 30%. As and when you are finding out the call IV and put IV are almost equal, do not do positional option trade. Means do not buy the options. So why so? Because when the call IV equal to put IV almost equal, there should not be 10 to 15% difference between the call IVs and put IV of different strikes. That says it is a indecisive stage. Means market doesn't know which direction to go. The trend does not know which direction it has to move. And very frequently you can find out nowadays this kind of phenomena is happening. So if you just look into this part, now you have here, so 40, 44, 41, 45, almost you can say almost equal level it is maintaining in the morning. So here is a clear case of confusion. So now market has not given you any breakout. The uptrend you cannot able to trust, the downtrend you cannot able to trust. So that particular counter is having a difficult stage now. So you cannot able to trust any of these moves now when there is a equal IVs will be there. Now coming to the positional trade. So these are the three very important rules. Buy the call option if the price close above 0.38 retracement of high-low range. Reference is midpoint, and if you are using Fibonacci method, it is well and good. Buy the put option if the price closes above 0.38 to retracement of high-low range. So this is the concept it is telling. So I'll just take you to this same part of our Fibonacci analysis. Say for example, you have done a analysis. This part is being done for 21st of April. You are finding out that okay, Nifty has given a couple of targets. So Nifty, as for this, if you are so this is a correct analysis. So why not we'll have a look on the Nifty future, where the Nifty future has moved today, whether this calculation based on the opening reference has worked or not. So have a look on this. So here Nifty opened at 9031, gone to 9067, low 8909, and the closing price is 8961, 8909, and future and 8961 closing. So 8909 level it has come, 8961 89009. So this level it has come. So 888 retracement it has crossed, and 8960 it has closed. So this is the, it has closed here 8960, couple of price points above that, and it has very much penetrated this level also. So at this point of time, very carefully listen to this. You did this calculation, this has come, and now around 315, around 315 of time, you are observing this price is going to close below 0.38 to retracement, which is 8986. At this point of time, to buy a 8,900 put option or 9,000 put option and for positional trade is advisable. So now around 315 to 330 you are observing today whatever the calculations I did, as per my calculation, Nifty has given the downtrend breakout and it is closing below 0.38 to retracement level, which is 8986. This is the opt case. You should buy one option for a positional purpose and do the calculation as per the web mode or any mode. So you buy a put options at this point of time, say 9,000 put you can buy, 8,900 you can buy, 8950 put you can buy, positional you can buy it here, hold this position and keep it. Once the Nifty moves above 9076, you have to put a stop loss and come out. And once, so the very criteria is as long as the price is closing below 0.38 to retracement level, that says you are into a Fibonacci trend continuation pattern, you must buy the option, positional option, and hold it. But same time, I will just give you a word of caution. Options involves with the time value. Do not take in the huge positions and wait for that money to double or triple. If one or two lots, it is okay, but not beyond one or two lots. If you are going for 150 lots and all, then positional options may kill you without any information. So all your money will disappear within no time. So this is a very, very important thing you have to understand. One or two lots, looking at the trend, you can do it because it is most toxic instrument. It can increase by 50-60%. Same way also it can decrease by 50-60%. So be careful. So once the 0.382 level, your closing basis it is maintaining. So you can have a purchase of put option. Similar way, if it is closing basis, it is maintaining 9075 above, you can have a call option also. So that is also you can have the things. So here, so now second part is SFIT, it is working now. So here second or intraday or positional feature. So select the index. So first you have to do the trend analysis part of the things. So trend analysis part of the things. So now it is the end of day and we may not get the actual data. So first any one strike you can choose. So no, that is a obsessions are happening. As this Elliott wave principle is concerned, it has a structure of waves, but thing is that majority of trader doesn't know the structure of wave also based on the Fibonacci principle. If you study the Elliott patterns or Elliott wave, you'll find out every wave is having a Fibonacci relationship. Now question come, why Elliott has given there is a 5 wave, there is a 3 wave. Why not other number 6 waves and 4 waves, 5, 10 waves or 8 waves? So why this 5 and 3, from where it has come? So 5 and 3, so from where it has come and why this 5 and 3 has catched Elliott's imagination. So here First of all, these two numbers are the Fibonacci numbers. So 1, 1, these are the Fibonacci. 2, 2 plus 1 is 3, 3 plus are 5. So these 3 and 5 are the first consistent Fibonacci numbers. So before that 0, 1, 2, then the actual consistent Fibonacci number starts from 3, 5. The first two Fibonacci number points to the Elliott wave. Second, whether this is 5 by 3 or 3 by 5. So both the cases, one is the 5 by 3 if you can take. So you can say 1.618, that level you can get, and 3 by 5 if you can take, that is also one ratio. So this two also represents two vital Fibonacci ratios. And as per the cycle theory, so these are the only reference. So these are the, maybe because of this reference point, Elliott has started thinking about adding 5 wave and 3 waves. So now question comes, this 5 wave and 3 wave again having one derivation. Every impulse is a 5 wave pattern. Impulse means every demand cycle. When it comes to the supply, this is corrective cycle. So demand and supply both are having the different cycle. So that doesn't mean that impulse is always in the upward in direction or trending upward. Impulse can happen in the downward direction too. So impulsive wave can happen in the downward direction. So here, these are the basic part of your Elliott. Then there is every wave is having a Fibonacci relationship. If you do not understand this Elliott wave, we too have given one Elliott wave analysis Android app. This is a free app. You can download and use, or you can use our web calculator. So this two informations it required, three informations it required. What is the day's high? Say 9062, and day's low. So day's low, you can feed it here. Day's high 9062 I am feeding. I am feeding the day's low 8909. So 8909. So whatever this Nifty is, 8909, 9066.7. So 9066.7, 9066.7, and we have closed today at a price level of 8961. So 8961. So this 8961 also I am adding here, and I am going for the calculation. So this gives you Elliott waves, wave 1, wave 2, wave 3, wave 4, wave 5, and ABC pattern. Now question comes, here I did a calculation. How I know which pattern is now set? Whether it is going for a impulsive pattern or a corrective downward pattern, how I know that which kind of pattern is now set? So for this reason, tomorrow you have 2 point of reference. First reference, you need to see, because here we have not given that opposite side. Yani means the impulsive, rising impulsive we have given, falling corrective we have given. We have not given rising corrective, we have not given falling impulsive. These two tables are not here. So for example, tomorrow, if this particular Nifty is going up, so you have closed at 8961. So it is wave 2 below you have closed, or you can say in the wave 1 itself you have closed it today. Wave 1 itself you have closed it today after making the low. So tomorrow, if Nifty opens gap down, think about gap down. So tomorrow, if Nifty opens gap down, very carefully listen to this. So today it has 8961. Tomorrow, if it is opening gap down, and that gap down is till 8932, no problem. You can still follow this calculation. And wait for the 9009 to complete. 8,009, sorry. So 9008 to complete, which is the wave 3 completion. Then there should be a retracement. And once that retracement happens, after attending 9008, if the Nifty fall back, buy the Nifty for a target of 9059. That should be the process. Say tomorrow it opens gap up. If it is a gap down, no issues. If it is opening a gap up, 8038932 above gap down, no issues. If there is a gap of action happens, then you need to do a recalculation. Gap down below 8932 is admissible. So now question comes, how we can do the investment decisions based on that. So how we can do the investment decisions on that. So that is very important. So so the investment decisions using the Elliott wave principle is one of the finest thing you can able to do. And for doing the investment decisions, you require its volatility. Say its VIX or volatility of that particular instrument is very, very important. So suppose if you are getting the volatility of that particular instrument, so now say now I'm just going for Nifty, 45% of the VIX. Nifty, 45% of the VIX. Recent low was 7,500 and so recent low, so 7,500 and an odd, and from there we have moved ahead, and on the day of low formation, so where it has closed, so that part only I need to see. So you had a March month, there was a 7,500 and an odd was the low. So closing basis, the low is 7610. So now 7610 was the closing basis, it was the low. 7610 is the closing basis, it was the low. 45% was the VIX, current VIX. Current VIX is 45. So first identify the price range. Price range. You are going for investment. So 45 price range. This is the yearly range. So 45 divided by 100. So the price range comes to 3424. 3424. Say you want to derive the move for entire 1 year. So for entire 1 year, you want to derive the move. So here I'll be taking the closing low 7610, the recent March, what is the lifetime low it has given 7610. I have 3425. This is the price 3424.5, rounding it to 3425. So my rising impulsive wave has started, and this rising impulsive wave, the first it completes my wave at 8918, then there should be a retracement till 8100. Post this retracement, there should be a growth till 9700, which has never happened. It has come till 9300, and from there it has retraced. Now from this point it is retracing. Very carefully listen to this. 7600 Nifty spot lifetime low, current VIX 45%. VIX, based on VIX also it will change every time, and based on that yearly 3425 points is expected. We have seen 7600 to 8918, one wave completed. Then there should be a retracement. Whether that retracement happened or not, that we are not concerned about. Third wave is still 9727. We have achieved till 9300, and from there the retracement is coming now. So imagine if after it has attended till 9700, sorry, 9300 and all. Now you wait for the 8728. Once this part comes, this is the time you should invest in the Nifty. So why, if it is 8,700 I am going to invest, why I should not invest in 8,100? So this has so far not given you the proper formation of a wave. So though the third wave is not complete here, so 9,000 till 9,300 it has achieved, but this VIX what we have taken, it is the current VIX. So this VIX has changed from the point of 86% to 45% now. So during this period of 86 to 45% fall in the VIX, many dynamisms have changed. So maybe the internal dynamism is pointing towards a lower VIX. So that we can accept, but we cannot accept the 8,110. 8,110. So if you go for with the Nifty for an investment of 1 year horizon with 8,728 level, you must keep your stop loss. Here the question of stop loss comes. So wave to end point, which is your 8,110, and your move or expected move you should expect from 10,036, next wave 5, 10,844 or 11,344. That is for your 1 year prospective move. 1 year prospective move. So this is very important as an investor. So as accuracy, you can say 83% of VIX. If it is, if you have, imagine if you have seen that 83% of VIX was there. So 83% of VIX, 7510, 7510. This was the actual low. So 7510, and you can 7510, and here 86 point is pointing to 6233 price point. 6233 price point. So this part, if you can look into, this too also can give you a great thought, but that 86 was only for the low formation day. So you are not concerned about the low formation day. The day you are sitting in, that day is only important for you. So currently it is low, closing low you can take, 7510 you can take, but the current VIX is very important, because you are going to study from now. What happened in the past, that doesn't matter. So you are going to study from now. So if current VIX is 45, so you can get some 3,329 points. So 3,329 points. If current VIX is coming to 20%, then your again the levels will come down. Then again you will be getting some lower levels here also. So very idea is you should get the yearly volatility. So very idea of choosing the investment, first the yearly volatility. Based on the yearly volatility, price range based on the yearly volatility. Number 3, you have to find out a lifetime low. Lifetime low, you have to draw all these things, and post lifetime low happening, you need to see that which wave currently you are residing, and that wave, from that wave where it has to move. If it is already moved 1 or 2 waves, means gone to the third wave, it's not issue. If it has not moved to the first wave and second wave, then you need to wait for the third wave to complete. Once the third wave completes, on the retracement phase of the fourth wave, you have to make the investment. So fifth wave will come true. So now same way also you can have for the retractive waves, like ABC wave also you can utilize the same way. But ABC wave to utilize rising corrective wave, if you want to utilize, then the first criteria of using this rising corrective wave. So now question comes, why should I follow this rising impulsive wave for investment? I'm going to invest in the Nifty for 1 year. Maybe Nifty B's I am buying a future, I want to hold it for 1 year. So that is a different issue. Why I should accept this impulsive pattern? Why not the corrective pattern? Why not the rising ABC pattern? Why this is rising impulsive pattern I should accept for my investment? Why not rising corrective pattern? So why not for the rising corrective pattern? So that is also very important thing. So here, to use this rising impulsive pattern, always all investment cycles, very carefully listen to this, investment cycles follow the impulsive pattern, trading cycles follow the impulsive or the corrective. If you want to use this method for the trading purpose, you can use either impulsive or corrective after a thorough study. However, whenever you are using it for the investment purpose, you must use only for the impulsive pattern. So this is about the Elliott way, that we have a web calculator, we have a Android app. So these are two free things you can just download and start using. And those who are using our smart IT or other stuffs, they can still use that things. So paid apps also you can utilize. Now coming to the best option strategy, what you can initiate during this result season. So when what happens in the result season, any specialty in the result season, when company gives a result, does any specialty emerge so that we have to do specific strategies? During the result season, within a short span of time, the volatility increases or the price escalates to different zone. Either if the result is good, it can propel the price to a greater level. If results are bad, then it can propel it to the lower level. So here, three different strategies you can form using this part. First, 2 by 1 net debit call and put combination. It is an open-ended strategy. So here, either direction there is a big move, you get the profit. So here, suppose TCS is at 2175. You are selling a call option which is at the money or just in the money, buying two lots of out of money call option, and same way you are selling a in the money or at the money put option, buying two lots of put ups out of money put option. So by this process you are forming a 2 by 1 net debit call and put thing, and this is should be done with a delta 0, net delta 0. So this is a strategy you can initiate. Net debit, wide wing, short call and put butterfly. So butterfly strategy also you can able to find out. So butterfly means the same 2 by 1 ratio will be there, but you must sell one higher strike call and higher strike put, lower strike put also. So here this is 2 by 1 net debit and call and put. You are having a delta 0 approach, but same time it is having, this strategy is having a exposure to lose in the theta terms. The theta is imbalance, theta can land you in the losses. So this, to avoid that, because post result there will be a sudden fall in the IV, so that may impact your profitability. For that, to same strategy you can carry on. However, selling a higher strike call option along with the 2 by 1 call or a lower strike put option, that can yield to a neutralness, and it is a close end strategy. Your profit will not be unlimited, it will be a close end. Third, you can form a covered put with multiple calls. So two call option you buy and future you sell and put you sell. That too also having a delta 0 approach. Delta 0 approach, if result is not as per the anticipation, stocks may correct badly. That time you will have limited losses. If the results are good and it moves good, then you can get a good profit. So before result announcement, you will get a lot of uh, uh, information about how will be the result. Many announcements will be there. So based on those analyst call or announcements, so you decide what kind of directional option strategy I should take or neutral strategy I have to take. So similar kind of one strategy also I have simulated here in the Nifty using our option tool. So this is the strategy I have initiated. So 2 by 1. So here 2 by 1, instead of 2 by 1 I am using 2 by 3. So two call options I am selling, three call option I am buying. Here to two put option I am selling, three put options I am buying, all are Nifty. So this particular strategy, when it is being initiated, so this is the payoff. So if it is going oscillating between 9,500 to 8,300 level, I have a small losses. So maximum loss is 7,000. But if it manages to break that level and go to higher band or lower band, my profit is good. So here, this particular strategy being initiated with respect to the delta neutral approach. So if you go for the Greek scanner, wherein this software those who are having, so here the software gives you the entire Greek. So 9,500 call options. May month we are buying 3 lots. So 0.37 into 3. So this should be near to 1.11 delta. And same way we are selling a 9,000 call option which is also having 1.116 delta. So this results to 0. So this is a negative, this is positive, 0. Same way for the put option it is being done. So for your confirmations, any strategy you should initiate during this result season, it should be open-ended or close-ended, that doesn't matter. But one thing, be very careful, post result announcement the IV is going to fall. The IV of the option is going announcement, so the IV is going to fall. So you need to take care of that. IV decay should not impact your profitability. So for that reason, these 3 strategies is highly acceptable during the result season. Means 2 by 1 net debit call and put. Very carefully look into this. Or you can go with the wide wing short call butterfly and put butterfly strategy. Or you can go with the covered put with multiple call options long. So in all these cases, the approach is delta should be 0. So here post result, what is going to happen we do not know. So we are neutral on that. Only in the last stage of our exceptional case, herein we have a view that yes, post result announcement, the stock is going to react positively. So based on this, we have just given a directional view. So other cases, it is remains same. So similar kind of strategies you can form in any counter during the result season. So these strategies are during the result season or in the high volatility time. Also you can utilize. So my last part of my presentation will be the Gann square of 9. So this is a last part of my presentation, the Gann square of 9, dynamic Gann square of 9. So what is a static Gann square of 9 and what is a dynamic square of 9? Static Gann square of 9 doesn't take the volatility into account, doesn't take the candle gap into account. So here in dynamic we are using the candle gap or candle depth. How to find out a candle depth? First you divide high minus low divided by high. This will give you the candle depth. Multiply that with the candle depth, multiply with the high. Do remember you have to multiply with the high, you have to get the range. That range need to divided by 81 because in square of 9 81 elements are there. So you have to find out the step. You have to find the low plus step to get the seed number, or you can subtract high minus step to get the seed number if you want to analyze the downtrend. And the next step, if you are go on adding one element, you can get those numbers. So now here in the Gann square of 9, Gann 2, we have given that particular things. So here suppose 908961 and Nifty high was, so Nifty, whatever the data we have seen here, so just to take this thing so that tomorrow you can able to experience it. So today whatever the data points is there, let us take and experience that. 9067 and 8909, 9067 8909. So by decision I want to calculate. So the wheel is being drawn here. So currently, so some comparison is there. My closing price wherever is there. So low and closing price has to be compared. Then it has given. So it is putting my buy entry at 9009, stop loss at 8961. These are my first cycle targets, these are my second cycle, and these are my third cycle target. If I want to derive the sell decision, so it does in a different way. It is telling me to sell at 8912, and these are the levels. So this is already recorded in the presentation. So once you get the recording, have it cross verified tomorrow whether these levels calculated by Gann square of 9 has worked or not. So this is a manually, if you want to do. Why we have given this manual option? Many of you can able to do the commodities, currencies, which are certain equity symbols which is not there in our automated tool. So if you want to do that, then you can use this manual edition. So here the approach of Gann square of 9 dynamic principle is, first it takes the candle depth, then price range, divide by 81, get the step. It has to add it to the low to get the seed number, subtract from the high to get the seed number. And this is also one of the simplest, what very good technique for your intraday trade. Those who are intraday trader in commodity especially, they can get a very good success in this. And though it is very simple method, but it is very powerful method. So I have shown you all these things, and I have also shown you that how the trend reversal date calculations of this month has worked. In the beginning part of my presentation, I have told you that how the trend reversal date calculation 7, 9, 16, 17 and 29, how they performed this month April for the Nifty. So 7th you have expected, based on 1st and 3rd April, expected positive trend, it has happened. 9th you have expected positive, these two also happened. Then 16th and 17th are consecutive days, and based on 15th it was a downtrend, so you have expected uptrend, so these 2 days also it has validated. So 29th also you have another day for trend reversal day, so that day also you can observe. So this is doing here Gann square of 9. First we are taking the high low divided by high. This is the candle gap or candle depth, any name you can give. This candle depth multiplied with your high to give you the range. This price range need to be divided by 81 to get the steps. Low added with the steps will be the seed number. Then the seed number, whatever you are getting, the next number in the wheel will be the seed number plus step. So step, the very next number will be the whatever the result number, first result number plus step. So by this way 81 numbers will be derived. If you want the downtrend, seed number minus step, and it must be high minus step initially. So by this process you can form a dynamic square of 9. You can take this part. You can also take the volatility. Based on the volatility, the price range you are deriving from the past 10 days data, that also you can program on English. And during this process I have also told you that how we have how to invest in the equity mutual fund now, how to do intraday trade in the equity future commodity using the Fibonacci and volatility. Exceptional case I have told you, when that volatility is high, how you have to do. Intraday positional trade in option, how to choose a correct strike, how to analyze and follow it, that also you have learned. Pair trade in the bank nifty you have understood. 3 option strategies what you can able to initiate during the option, this particular result season, that also we have discussed. Pair trade, dynamic Gann square of 9 and Elliott wave. And as far as the option intraday is concerned, as far as Elliott wave is concerned, these two ready-made tools are available in our website. No need to go with the Excels and other things. That is nicely programmed, and it is free tool. So free tool, you can just download, go to the calculator link, download these free apps. If you are having paid app, don't download it. Paid app and free app will create confusions. If you do not have our app, you can utilize. And if you want to procure that any of the Gann's product or any of our product, you can buy it online. These are our numbers are being given. You can contact us. And those who are from Gujarat, those who are from Gujarat, very important, those who are from Gujarat, you please contact me. There 9SG is looking after the sales activities. I will establish the contact with him and he can help you to procure the product. So you just message me at 9941105705. This number you can message me. So here I can share 9SG's number. You can have a discussion. So and any product you want, you can procure from him. So this is about today's session. Tomorrow we have the same session in Hindi. Tomorrow and day after, these two things, these subjects will be discussed in Hindi. You can, if you are free, you can, or if you understand Hindi, you can join that. And those who are looking to invest in the mutual funds, they can select our mutual fund section. You can online invest in any of the mutual fund companies. So only couple of companies direct links we have given. If you want to invest in any other companies, you can contact us here. So this is a entirely free process. So online investment in the mutual fund, it happens in your account with NSDL and all. So these two you can take benefit of, and here we will suggest you the best funds to invest, because as all of you know, those who are the investor in the mutual fund, you must probably knowing there are 3600 schemes are available in the market. Only 300 schemes perform, others doesn't perform. The reason is the valuations, basket of stocks, person who is managing the fund, and the style of that fund management. That is very important. So this is the 3 to 4 categories are there. So if you are interested that you should get some of our recommendations, advice for that, which doesn't cost you anything. Only thing is that you have to do with our portal. So if you are convinced with that, you can approach in any of these given phone numbers. We will help you to decide a right fund for you. You can have some that systematic investment plans, anything you want. So based on that, we can guide. And it is a purely transparent process. You will, through online process, you will invest. Through online process, you can withdraw. Everything you can able to do through online. All of you have got the email to join this event. So there we have a Telegram group. We have given a Telegram group. Join there so that whenever any future events are there, you will be informed about that. So there is a Telegram group. So those who have all your emails, whatever is your emails, just there is a Telegram group, and we do not give any tips there. So just for our programs we inform. It's a free group. Just your joining email, whatever you got there itself, that email is containing the Telegram group link. Join there. Whenever that is any future programs are there, you will be intimated through that group. So recordings will be given in that group. So you will get a lot of benefits out of that.